Australia's property market is in panic mode. Investors are quitting the market and selling up, and renters are paying the price. Now, what we've seen over the last 6 months here in Australia's property market is month-on-month increases in property prices, but also month-on-month increases in rental prices. Renters have been struggling to find a place to stay because there's a dwindling supply of rental properties. So why are landlords selling up in terms of the property market, and is there a way to potentially fix this bigger problem? In this video, we're going to discuss 5 key points about the rental crisis and talk about some of the possible solutions. The first and probably most critical point is that landlords are selling their properties. Over the last few months, we've seen a spike in sales numbers, in particular from investors. Now, why are these landlords selling up? The easiest factor to point to is interest rate rises. As we've seen over the last 12 to 16 months, there's been 12 interest rate rises issued by the RBA. This has pushed up mortgage lending for investors, and investors do pay a premium compared to homeowners on their interest rates. So most investors at this point in time will be paying around a 6.5% to 7% interest rate on their investment properties. Now, for most investors, once you take out rates, land tax, insurance, property maintenance, the list goes on, all of the additional expenses that come with owning an investment property, counting all these things, and given the significant interest rate rises, most investors are not seeing positively geared property in their portfolio at this point in time. Most investors might be negative $5,000 a year, minus $10,000 a year, or even in worst case scenarios, negative $20,000 per year, depending on the property and depending on their mortgage size. I know for Emily and I, one of our properties is about minus $15,000 a year. Now that's okay. Negative gearing can be a useful strategy if you're a high income earner and you're happy to hold that property for a long period of time. But some investors have not buffered for these higher interest rates, and it's a bit of a shock when they go into negative cash flow. So for those investors who have only held properties for say 2 to 4 years, they're looking at the property market gains that they've seen, and maybe they've had $50,000, $100,000, $150,000 of equity increase through the last boom that we saw through COVID, and they've seen these higher interest rates which are taking money out of their pocket, and therefore they're making the decision to sell up. Now, there are also some government policies which are making it more difficult for investors to invest in the property market. In particular, Australia's states have started cracking down more on investors, with the most recent example being the land tax changes that some of the states have been making. Now, this is putting even more pressure on investors and more costs on everyday mum and dads who are looking to invest in property, and maybe turning people away from investing in the property market and looking at different businesses or looking at investing in the stock market instead. So this leads me into point number 2, which is renters are now paying the price. Now, the rental pool is a basic economic game of supply and demand. Now, on the supply side of the equation, we're seeing investors sell up, and this is decreasing the rental supply here in Australia's market. Now, looking at the demand side, using Queensland as an example, we're seeing both overseas and interstate migration, with skilled workers from overseas coming here into the southeast Queensland market, and a lot of Melbourneites, Sydneyites, and people from Canberra moving up to the big smoke here in Brisbane, looking for a change of lifestyle where the cost of living is a little bit better than some of those bigger cities in Sydney and Melbourne. So with reduced supply and increased demand, we're seeing this increased pressure on property rental prices. Now, rents in some cases have increased around that 20 to 30% mark year on year. And in the worst case scenarios, we've seen a doubling of rent. Now, some of the state bodies have tried to address this by bringing in an annual rental increase. So landlords are unable to increase the rent other than once every 12 months, which I think is an absolutely great initiative. I think it's fair for both landlords and renters to receive an annual increase. But this does mean that landlords need to take the initiative. They will need to pass on increases that they see fit or that meet the market, because it is a market-led demand in terms of rental prices, when they have that annual review. Now, the third point is increased rental prices is actually impacting inflation. One of the interesting things here is that housing is taken into inflation's calculations. And with the lack of supply and increasing demand and prices increasing, this is also attributing to the push in interest rates and the push on Australia's property market. It's also more difficult for people to find places to stay in one area. It can make it more difficult for you to stay in that same suburb if you're getting outpriced in that location. I've seen this a lot in Sydney and Melbourne. If you want to stay in that 5-kilometre ring from the city, you have to be willing to pay, or you have to be willing to downsize and maybe move into a room rental or rent a much smaller apartment rather than being in a house. So there needs to be some compromise there if you're not giving up the location. Now, factor number 4 is the lack of construction here in Australia. We've seen construction slow across the board, with material prices increasing and money drying up with serviceability falling. People have not been willing to take on new construction projects. Now, the government is trying to incentivize construction. They give out grants to first home builders. They sometimes subsidize developers to allow them to release more stock. It's a really interesting narrative here in Australia between developers and the everyday mum and dad, because developers are seen rather negatively. But we need developers to develop, to create more stock, to ease the rental supply. We also need more trades. There is a trade shortage here in Australia, especially the high-end skilled trades. So again, with this supply and demand story, supply is unable to keep up with demand, and that's why we're again seeing property prices rise and rental prices increase. Now, this leads me on to point number 5, which is what can Australia do about this rental crisis moving forward? In my opinion, we do need more affordable housing, but people do not want to live in a shoebox here in Australia. People want their own home, even if it's on 300 to 400 square meters. So I think developers actually do need some more discounts to make it profitable to build. We need to support our trades by allowing skilled workers in the construction industry to come into Australia. Now, this does mean more people into Australia, but if there's more focus on actually building property, then it's going to be a great thing overall to try and relieve this demand. Now, the government is targeting to build 1.2 million homes over the next 5 years, which is around 250,000 homes a year. This would be record building rates for Australia, and to try and maintain that is going to be very difficult. I also think Australia has a lot of empty properties that are abandoned or gone to ruin. And I think there needs to be more taxes on people who hold these empty homes, especially in those inner city locations. Yes, they might be sitting there waiting for a future development, but if the property is just run down and it could be rented out on the market, I think there needs to be a different way to try and tax these types of properties too. Now, at the end of the day, we do need mum and dad property investors. Most of Australia's rental supply is provided by everyday mum and dad investors. So I think the Australian government and the state governments and the local governments need to incentivise these mum and dad investors to stay and create investment properties here in Australia so people can rent those properties. Not everybody is going to want to buy a home, and not everybody can afford a home and plans to potentially rent long term or be fluid with their living and work situations. So there does need to be a rental supply here in Australia's market. I think that it was always going to be a difficult balance going forward, both on the construction side and on the investment side. There's never going to be an easy solution to this type of problem. But in my opinion, if they look at some of those vacant properties, if they do continue to allow discounts to investors and developers where it makes sense, and the governments also look to bring in sensible policies like the 1-year rental increase, which I think benefit both sides of the equation, both the investors and the renters. I'd love to hear your thoughts down in the comments below. Now, I'm a long-term property investor. My wife and I own 3 properties here in Brisbane and a unit block in Coffs Harbour. So I'd love to hear your thoughts, whether you're an investor or whether you're a renter, about what you think's going on in Australia's property market. If you'd like to sit down and have a chat with myself, I run a buyer's agency here in Southeast Queensland called Purpose Property. We'll sit down, chat about your situation, chat about your short and your long-term goals, and how we can help secure your next property purchase here in the Southeast Queensland market, which is roughly a 35-kilometre ring around Brisbane. So thanks for sticking around to the end of this video. Drop a like, leave a comment down below, and click this video over here for more things real estate, renovating, and financial freedom. I'll see you in the next one. Peace.